What's going to be kind of your superpower, or the thing that, you or your firm can bring to an entrepreneur, so that whenever, you're around the deal, everyone knows exactly what it is that you're going to bring.
This episode is presented by our friends at Front Finance. All right, I am here today with Marlon Nichols. He is a partner at Mac Venture Capital. Marlon, welcome to The Confident Investor.
Hey, Lisa. Thanks for having me. I'm glad to be here.
Awesome. So we love your background just as a professional athlete. Myself, I've also been a gymnast growing up. And so that really informs the hustle and the drive that I have as an entrepreneur, as well as an investor. But I'm just curious for you, how did you get started as an investor and making this really your life's work?
Yeah, so I started my career in technology right out of undergrad. I joined an enterprise software startup, and ultimately was one of three people to help that company grow into Europe. So I lived in the UK to do that for about 3 years before the company was ultimately acquired by SAP. And it was during that time actually where I had the chance to play semi-pro basketball while living in the UK. But that was my first experience of seeing a company almost from its inception to a liquidity event. And there was a lot of learnings there, but I also learned about myself that I didn't want to be an operator. So then I moved back to the U.S. and basically tried my hand at consulting and had a pretty good career in consulting, doing management and strategy work, doing like post M&A integration work, and then strategy stuff for media and entertainment companies. And again, I learned that that was too far of a swing, and I needed something in between. And so then I set my sights on venture capital and investing, primarily because I wanted to be around cutting edge technology all the time. I wanted to interact with really smart executives. And I didn't want to just be a consultant. I just didn't want to be someone that pops in and pops out. I wanted to be a part of the journey, but not necessarily operating the company. So for all those reasons and all those attributes, venture capital made a lot of sense for me. So I went back to business school at Cornell and had the opportunity to basically lead the school's pre-seed venture fund for the 2 years that I was there. And then upon graduating, I joined Untitled Capital, and that's where my career in venture began.
And were you always pretty clear about the types of industries that you wanted to invest in, or the types of people?
No, I knew that at the time when I first had the inclination that I wanted to do venture capital, I thought I wanted to do ed tech investing actually, but once because I do have an extreme passion for education and making it more accessible to the masses, like high quality education more accessible to the masses, et cetera. That hasn't changed, but solely focusing on ed tech just wasn't in the cards. My interests are vast. And so I think I get pretty bored pretty quickly and end up back in the same situation when I was operating in one company.
Mm-hmm. And this idea of being bored quickly, do you think that that's a common trait of investors, because that's part of what drives them to be curious about so many different industries?
I think the curiosity is probably a better descriptor or attribute of solid or good investors. Without that level of curiosity, it's hard to go out and find new opportunities and actually be interested in them, and have a real interest in figuring out what's next and where the world is going. That all comes from a place of curiosity. So I think that is absolutely a key attribute.
This episode is presented by our friends at Front Finance. Are you looking for ways to boost your investing strategy? check out Front. It's a free app that helps you make better investment decisions with their proprietary Fisco technology. It analyzes companies and stock data 24/7 and rates stocks with a single score, like a credit score for stocks. Connect your existing broker to get a complete portfolio analysis and daily personalized stock picks based on your preferences and existing investments. It's time to start investing with data, not your gut. Download Front for free at refer.front.org/Lisa. Cool. So can you tell us then about your firm and what is the mission and thesis?
Sure. So Mag Venture Capital is a seed stage venture capital firm. We invest at what we call the seed stage, and we define that as a company having built a product, so they have a viable product, and they're starting to get some feedback from the marketplace. So there's some data that we can pull from to kind of justify our initial opinion about the company and the opportunity. Our investment thesis, we coined it cultural investing, which is to basically say that we believe that everything around us, the entire world, is based on human behaviors. So how are humans behaving? What are they doing? How are they spending their time? On what and where are they spending their money? And so what we try to do is create our own kind of crystal ball, right? Because the idea is if you can figure out where people are going to be spending their time and money in the future, and you invest there, then you're going to be investing in the next great companies. And so what we start with our emerging behavioral trends and shifts. So what are the changes in human behavior that are kind of emerging, and then do a lot of research and have a ton of conversations to try to figure out or make a determination of which of those emerging behavioral shifts are going to have stay power, or put a different way, become a part of popular culture, or become social norms. And so if we can identify tomorrow's social norms today and invest, along those lines today, when it matures in the future, we'll be in a pretty good place. So that's what we look at, and we write a number of reports on some of the themes and shifts that we're seeing, and put it out there for a number of reasons. One, just being good citizens of the community. It's good to share the information. Two, we want entrepreneurs that are building in those spaces to know that we care about what they're building, and they should reach out to us.
Great. Yeah, I mean, you've talked about culture as currency often, and I really like just the minute interest in human behavior and shift, because that's, as we know, it drives everything. I'm curious, what are some of the trends in human behaviors or shifts that you are most excited about as you're looking at investing in those companies?
Mm-hmm. So the last report that we put out was around, we call it the gaming takeover. And similar to what when Mark Andreessen penned his Software is Eating the World, it's kind of in that vein, right? It's gaming culture and the gamification of many things, in our universe is becoming a real thing. It's becoming more and more prevalent to the point where you can see aspects of gaming culture in really old industries like construction, which is, it's so random and something that if you had asked me 2 or 3 years ago, I'd say that makes no sense. But it's something that we're seeing. The report we put out before that was around the conscious consumer, and that one is about call it customers and employees. Basically forcing large enterprises to focus on the things that they care about from a social perspective. So whether that means doing things to address climate change, or doing things to promote racial equity, and gender equity in the workplace, things like that. And it's just something that we're seeing happen more and more. We're seeing companies, lose millions of dollars, tens of millions of dollars in revenue because they were on the wrong side of those beliefs. It's not something that we see changing anytime soon. And so that is, pushed us ahead in terms of some of the gap closing or green type of investments that we've made. One example, my partner led a deal in a company called Good Fair, which is basically about recycled clothing, to lessen the impact that we've seen fast fashion have on our planet. And there are a number of other examples like that within our portfolio.
Do you think that when it comes to companies that have a positive impact, so really that double bottom line, going forward necessarily, do all companies need to have some sort of positive or at least neutral impact? And do you think companies that are having a negative impact, if that's on the environment, on anything else, that those are companies that investors will continue investing in?
Yeah, I think the short answer is people won't allow it, and they're showing it more and more. You're going to have to be at least net neutral, right, where you're not causing harm, but preferably you're helping to reverse some of the negative effects that have taken place over the years. I don't see a way forward where businesses being created and thriving if they're doing damage to the environment.
Mm. So for people who don't really grasp the concept of culture as currency, could you just dive into that a little bit more, based off of what we've already talked about in terms of human behavior and social norms?
Yeah. So again, it comes back to human behavior is driving everything, and popular culture specifically driving everything. And so you look back at where a lot of the trends that take effect are stemming from, and those are ethnic communities essentially. It's Black and Latinx communities for the most part. And so we also know of those communities that the spending power is immense, and the inclination to spend on new things, to be early adopters of new things is also a characteristic of that demographic. But what we also know, and this is unfortunate, is that those communities have, really big challenges that they face. And those challenges for a long time have not been addressed or met. And so, we posit that if you start to build solutions that, specifically address some of those challenges, that spending power that they've demonstrated in the past, it will be something that is applied to something that they actually care about and actually need. And so, in addition to that, where education gaps are lessening, right? You're seeing more and more diverse people with advanced degrees entering entrepreneurship and doing things of that nature, which means that, and also usually the best people to solve challenges are those with lived experiences. So I've gone through this in some way, and I have a real experience or a real opinion based on real experience. I'm probably going to be better suited than someone that has never experienced this a day in their life to build a solution. And so more and more entrepreneurs are doing that, and they're taking up some of these challenges. And so there's just an immense opportunity to find, billion-dollar opportunities coming out of these communities. And so that's essentially what the concept of culture as currency is about. It's looking at the cultures that are tastemakers of our society, and and identifying challenges and opportunities that we can invest in.
So can you give us an example of a company that really fits into that theme and your thought process as you were evaluating investing in that company?
Yeah. So just taking it back, we invested in a company called Maven years ago, over 5 years ago now. And it was essentially a mobile platform that allowed diverse hairstylists to sell products and actually generate revenue from product as opposed to services. And that, what it might seem like a very small thing, but in those communities, those hairstylists, they're essentially running break-even businesses. So they don't have the capacity to carry inventory. And as such, if you can't carry the inventory, you can't sell it, which means you can't generate revenue off of it. And so what Maven did was essentially it took away the burden of inventory management, the expense that goes with inventory management, and basically leveraged the hairstylist as a part of their sales force. So and I should also add that when you're talking about products for hair, the most trusted person in your network is your hairstylist. So they had the right salesperson baked in, and so they went after this challenge, which was basically somewhere like between a $6 and a $9 billion market that no one was tackling at the time. And they brought on something upwards of 80,000 stylists onto the platform. And what has happened is the company has evolved to now being a virtual hair salon, essentially. So they kind of started to move away from kind of being that, I guess, e-commerce platform for the hairstylist to not only being an e-commerce platform for them, but now, customers can go and buy directly from the platform, and Maven will connect them with a hairstylist that will install the hair. So now, not only does the hairstylist have an opportunity to generate revenue from the product, but they're also seeing a tremendous more of business on the services side. And so, this is a company that has basically transformed the lives of tens of thousands of hairstylists around the country, and they're obviously generating a ton of revenue as a result of that.
So it looks like you evaluated the market opportunity. You evaluated how exactly is this entrepreneur making something more efficient, more effective for the people who are their customers. And then from there, it was the evaluation of what are the potential revenue streams, how can they expand those revenue streams down the road? And then anything else? And
then it was the probably one of the most important things is why this founder. He was kind of a unique individual in the sense that not only did he grow up in a community of hairstylists, so where he saw the problem firsthand, but he also spent a number of years in China and Asia, basically learning about import, export, and building those relationships where he's going to source the product from. So very uniquely qualified to build this business.
Got it. So that's really a good insight into how people should be evaluating the leaders of the company. Knowing that your background as an athlete, how does that inform your investment philosophy and the way you look at founders?
Yeah. It's team. No one is going to ever be able to build an exceptional company all by themselves. So, looking for leaders, and, there are all types of leadership styles, right? But you're looking for someone or a group that can build an exceptional team around them with complementary skill sets, et cetera. Because my sport was basketball, and it only works if you have 5 players on the floor that are excelling at their different things, right? You got your scorer, you got your your ball handling playmaker, you got your rebounder, all these things. You have your maybe your best perimeter defender. You have to, in order to truly be successful and win, you got to have a complement of skill sets, and you have to have a great leader, someone that can get everyone else to maximize their potential.
Great. And one of the things that I saw on Mac Venture Capital is that you're evaluating entrepreneurs who are, quote, building the future for the rest of America. So how does that play into the things we've already touched upon, but what does that mean, the rest of America, and how do you evaluate that?
Yeah. So everything that we do, there's a concept, the concepts of gap closing and gap widening, right? And so a gap widening solution would be something that is only relevant to, say, the top 1%, of the country in terms of income, right? Gap closing would be taking something and making it more accessible to the masses, right? And so that's how we see the world. How do you create increased access for everyone?
Got it. And are there particular types of traits that you see in people when they're talking about, let's say, closing the gap, that make you really believe that they could be the one to actually execute on that?
Yeah, on that, it's not so much because not all of our investments are impact centric, right? So not all CEOs that we talk to are going to speak in the sense of saving the world and making creating opportunities for everyone else. So what it really comes down to is the product and how we see this product growing. And the impact that we could see it having in the world. So it's more about that than in this specific segment than it is about the actual founder.
Got it. So can you walk us through your most successful investments or ones that you're most proud of, and just also walk us through what that process was like when you were evaluating the pitch and ultimately decided to pull the trigger to invest?
Yeah, I mean, there are so many of our companies that I'm proud of, but I'd say the top performer over time in our portfolio has been a company called Ready Responders, or now called Ready. Company was founded in New Orleans. And is basically taking a gig economy approach to healthcare. So they work with payer networks and insurance companies, and they become kind of the first response for emergencies and for periodic care, essentially. So instead of, for instance, calling 911, you would call your, name it, health insurance hotline, which they would monitor, and then they would dispatch, just like you would with a Uber or Lyft. When you're getting a ride, they would dispatch the closest caregiver to you. They would show up at your house or wherever your location is, and evaluate the situation and treat you, or escalate it further, right? And in addition to that, let's say, Grandpa Joe needs an insulin shot 4 times a week, right? It's going to be the ready responders crew that's going to go out and do that. In-home COVID tests, for instance, they have partnerships with a number of states and cities throughout the country where they are the kind of government partner for administering those in-home tests, right? Particularly in communities that are underserved. So that company, I mean, we invested, I guess it was 4 years ago now, and they're approaching kind of a 60x multiplier for us. So we want to see that continue to grow, or at least maintain, and then ultimately get to a liquidity situation. But that's one that I'm really, really proud of.
Awesome. When you are evaluating investments, obviously, early stage, it's kind of hard to really take the financial projections super seriously because, as we know, everything changes. But you've said that a deal breaker for you is when a founder doesn't know the numbers of their business well. So what are the most important numbers that you look at an early stage?
Yeah, so it's and what I mean by that is really understanding the drivers of your business, right? So, I mean, if you take a marketplace, for instance, right? You're looking at things like transaction volume, the take rate of that transaction volume. You also, or those transactions rather, the average value of associated with the transaction, right? Like those are the things that are likely going to drive the growth of a marketplace, right? So you're looking for a founder that understands that, right? Like for your particular business, what are going to be the key drivers of success, and what are the levers that we can pull as a company to make sure that we accelerate those drivers. That's more so what I'm looking at, and then also just understanding like history, right? Who else has attempted this? Why did it work? Why did it fail? How are you doing it differently? Why will your approach be yield a better outcome or a different outcome? It's things like that.
Cool. So what advice would you have to new investors who are considering entering this space and just starting out and trying to figure out where they should consider their first investments?
Yeah, I mean, I think you should focus on what you're passionate about and what you know, right? And really how you can add value, right? Because what we're finding is that capital is actually being commoditized. So the emphasis, is now on how do you add value to the companies that you invest in. So, what's going to be kind of your superpower or the thing that you or your firm can bring to an entrepreneur, so that whenever you're around the deal, everyone knows exactly what it is that you're going to bring to make that deal or that company successful, and how do you do that different than anyone else?
So how do you differentiate yourself and talk about your superpowers when you're essentially pitching yourself to an entrepreneur?
Yeah, so we're a team, so it's more so about pitching the team, and our team. I gave you a little bit of my background, so someone that really understands what it means to operate a company, particularly on the software side. Also, someone that has a good solid grasp on strategy and how to develop strategy and implement it. In addition to that, my partners, one of them was a former mayor of a major city in the country, Washington D.C. specifically, with very strong ties to government, both local and federal. So if you're navigating a heavy regulatory environment and you can use relationships within the government to help move things along, I'd argue that we're probably going to be pretty good at helping you with that. Other partners, have managed, some of the biggest stars in the entertainment space, and operated companies themselves. And so, a network, we have a very unique network at the very highest levels within media and entertainment, professional sports, Fortune 500, agencies, both talent and branding, as an example. So one of the things that we do really well is make meaningful connections between our portfolio companies and their first major partners, to help drive business forward. So those are the things that we typically talk about. And then one other is around storytelling. I mentioned about the talent management piece of it. And one thing that you have to be good at is helping your client tell their story in a very strong way and do it early. And the same thing applies for startups. The way that you introduce yourself to the world is going to have an outsized effect on how successful you ultimately are, how large you ultimately become, and how quickly you can start on the journey of growth. And so we have a very unique competence in storytelling and helping our companies articulate who they are and where they sit in a particular ecosystem.
I love that, because one of the workshops actually and talks that I lead is called Your Story is Your Superpower. And I know that especially when people are new to a space or they feel like their voice hasn't always been heard in certain rooms, they start to contract and almost hide their stories, right? Hide their superpowers. And I think from both sides, whether as an entrepreneur or an investor, there is an importance of having self-awareness around like, what is it like that you uniquely bring to the table? So I think I really appreciate that you guys are doing that for your companies as well as for yourselves.
Thank you. Yeah.
The other thing that your firm has is a saying that the greats study the greats. Who do you study?
So many. So I've been fortunate to have some really, really good mentors over the years. So, going back to my Intel Capital days, I had Lisa Lambert, who was my managing director at the time, who led deals for Intel, like I want to say VMware and some of those other huge enterprise deals. Dharmesh Thakur, who is now at Battery Ventures as a GP there. I learned a lot from him in my early days at Intel Capital. To folks like Jason Green, who's still to this day a mentor of mine. He's the founder of Emergence Capital. To folks like Ben Horowitz and Scott Cooper at Andreessen Horowitz for different things. Ben on the kind of deal making and company building side, and Scott on the how do you build a lasting operation for your venture firm. So there's so many others, but these are all very wildly successful people in our industry, and I have the privilege of being able to pick up the phone and speak to them.
And I just want to dive into a couple areas of focus that you have. Media, as we've talked about, and a subsector in there that we've touched about briefly is gaming. So your investments in esports. What's your outlook for esports as an investment, and do you expect to continue taking bets on companies in this space?
Yeah, so I think we have kind of two of the market leaders in different areas of the category. So we were fairly early in FaZe Clan, which is a professional esports team, and more importantly, it's a brand in and of itself, onto itself. And what I found to kind of be their secret sauce is that they are an esports company, right? They have those teams, professional teams, but the focus is so much more, right? It's on their e-commerce. It's on the different partnerships that they're doing. It's almost like being a full stack media company within the esports genre, right? And so I don't know that I would find another great company in professional esports that's built the same way, or that would be able to compete. So I can't see making another investment along those lines. And then the other is a company named PlayVersus, which is about amateur esports. And so the thinking on this one was, just like any other professional sport, in this country, you have a feeding place, right? So for baseball, you have the minor leagues, and you also have high school and college. For basketball, you have college, and you have I think they call it the G League now. And NFL, you have college football, right? But for esports, that hadn't existed. And so that essentially is what PlayVersus has built, starting with high school, now college, and ultimately, a standalone league for amateurs, for those that don't do the college route. But basically a training ground, a place for individuals to prove how talented and skilled they are as they develop and mature and get to the place where they can join a team like FaZe Clan, et cetera. So I think between those two companies, we're kind of covering, the esports category. Always interested in meeting new companies, but it's a high bar at this point.
Smart cities is another investment category that you're bullish on. So tell us about your view on cities and what companies are you most excited about here? Why is this theme really of interest to you?
Yeah, and this is more so a play on regulation and companies that, or a marriage of regulation and energy efficiency and green technology, essentially. For us, this is we play not exclusively, but primarily in software as opposed to hardware. And what we're looking for are companies that can really benefit the environment. Whether it's a company like I mentioned before, Good Fair, that's doing it through fashion and clothing and reducing the kind of carbon footprint associated with retail, or a company like Block Power, which is essentially AI-driven marketplace that enables cities and commercial building owners to turn their buildings green and to make them smarter. So these are a couple of the companies kind of in that space. I mean, you could put a Thrive Market in that space as well. A company that's eliminating food deserts by making high quality food affordable and accessible throughout the country, and doing that through increased logistics and technology.
Awesome. So it looks like you're really this theme overall of like culture, combining with impact and efficiency, and just the understanding who exactly it's serving in America, and especially those underserved communities, continues to drive a lot of the ways that you look at all this, as well as brand. I think that was like one thing I really wanted to highlight is when we think about how brands impact pop culture and social norms. And so somehow it's like you're tying all of that together, the story, the brand, the impact, and the culture into all the various investments that you make.
I'd agree with that.
And at what point did you start gaining confidence in your investing capabilities?
I'd say probably maybe my second year at Intel Capital. So I started to figure out that, I actually have a fairly unique lens, that I was bringing to the job every day. And then, Intel sponsored me to become a Kaufman Fellow, which gave me the opportunity to be around a lot of other investors, from around the globe, and just speaking with them in some cases daily. It made me understand or realize that I wasn't that far off from some of the folks that I had really looked up to in the industry, and just gave me the confidence to go forward and do it. Ultimately that's what drove me to leaving Intel Capital and creating our own fund. And here we are today.
What advice would you give to new investors now, just as a big takeaway for them?
Yeah, I think we already said it. It's really understanding your strengths and your weaknesses, and what is the individual thing that you're going to be able to bring to the table. While I don't think LPs want things to be too different, but they need to see some differentiation, right? So what are you building? How is it novel? And what is your what is the unique capability that you're going to kind of bring to bear, and how is it going to afford you to win? I would just have those really honest conversations with myself. And then, also, like, it's hard, right? Raising a fund is not an easy thing to do. And until you get to the place of like a Sequoia, when, you send out an email and then you're done. But it takes a long time to get to that point. Up until then, it's a lot of blocking and tackling. And it's not for the faint of heart. So, do you really want to do this? Why do you want to do it? Will you be good at it? Honestly.
Yeah, that's great advice. And very last question, which category or industry do you foresee the most upside in going into next year? And this answer will be for our exclusive members to find out more about what Marlon thinks. But Marlon, what is this one industry that you're looking at?
So, in a broader sense, it's logistics, but it's logistics broken down, I think, into what I'm looking at now, into two different kind of subsegments. One is around the transportation side of things, and the other is in and around fashion. So on the transportation side of things, we just invested in a company called Sote that is basically doing receiving and freight receiving and forwarding for the continent of Africa. Essentially, basically adding technology to an industry that has not seen any kind of technological innovation for decades. And because of that, is adding a level of transparency. It's reducing the delay and gratification that you typically see. And it's just so much more effective and efficient. And it has the potential to really open up the continent of Africa for trade in a way that we haven't seen before. So it's a pretty remarkable thing. But another company kind of in the space is more open ship freight. So think of like moving things like iron ore and grains where you can't put them in containers. And that industry also hasn't seen any, like zero innovation over a year. So this company, we're actually closing the deal today. They're basically leveraging AI and some other technology around distance calculation to introduce technology and make this make the process of booking these ships and transporting these items way more efficient. And again, adding transparency. And then on the fashion side, looking at things like how do we, if we're going to make new clothes, how do we reduce the carbon footprint, associated with making those new clothes? And for the clothes that already exist in the world, how can we effectively recycle them again while still reducing that carbon footprint, right? Using less water and things like that to recycle it. I think those two subsegments of logistics, it's going to be incredible in terms of an opportunity. And so, yeah, we're backing a few companies in both of them, and it's pretty exciting. We'll see what happens.
How do you recommend investors who are also curious about logistics to source those companies and figure out if they are good investments?
I don't know. I mean, it depends on what your background is, right? So, if you have, if you don't know about logistics or, have any idea of, what the key challenges are and the other solutions in the market, I'd say, well, first of all, you got to get smart about the space, right? So who are the players? Why are they different? Where are the gaps? And then I'd say you probably want to partner with firms that have been doing some investment in the space, and not saying blindly follow them, because you still have to do your work, but you can use it as an opportunity to learn from whatever effort they've already put forward. But yeah, I'd say pick your co-travelers. Pick your co-travelers wisely, and you just got to do the research.
Cool. Well, thank you so much for joining us today on The Confident Investor. Really appreciated your perspectives on investing, on leadership, and the future of what America and the world could look like. So thanks again.